All right. Hey, good morning, and thanks for dialing in and joining. I know it's getting warm and everyone's getting out in the field, and definitely today everybody's antsy because of the report. So I think what we'll do today, as people start to call in, is we'll go through the supply and demand table that we've sent a video out last night. We're going to go through a few of the fundamentals and we'll take a look at the charts. Usually we think the chart action is everything, and it will be in time. Today, though, the charts really don't mean much because the market's just going to start reacting to the all of uh, the news that we're going to get to absorb today. So we'll see how it goes, and it'll take several days before the technicals really kind of come back in line after a report like this. So by next Tuesday, Wednesday, the technicals should kind of equal back out and become more relevant again. So I guess first thing we'll talk about is yesterday's um, uh, yesterday's sell-off that happened. It might have had something to do with the grain markets, but I don't think so. I think it was because of the large hedge fund that had one of the largest financial catastrophes of all time and had to liquidate over $100 billion worth of stuff across all the different equity classes. And if you read about it in the news, there's going to be several major banks that take multi-billion-dollar losses because of it. And this group was running 7 to 10 times leverage on its asset base, and clearly that did not go well. So I think some of the selling yesterday was because of that. And then the next thing that I want to talk about is China. There's been lots of news kind of floating around in the marketplace about the Chinese in the U.S. are going to get in a fight. Blah blah blah. I don't think that has anything to do with food. The other thing that's floating around about China is that the Chinese corn price has completely collapsed. Well, it has come down, and it's come all the way back down to $10 a bushel. It was in the mid 11s, and they held it under 12. But I want to be really clear and point this out. The reason that the price in China came down is because they have imported over 45 million metric tons of feed grains from other countries, including us, and they have released over 3.5 billion bushels out of their own reserves. So in order to, of course they didn't, of course they held their corn price down, right? They put 5 billion bushels into the supply, and so I don't think there's too much to worry about there. What we need to worry about are these numbers right here. We need to worry about these ending carryout numbers and the stocks to use numbers, because these are what drive our market over time. Yes, all those other things impact us. Yes, they're relevant, but we are thinking about these numbers right here. So today coming out, there's two reports. There's the planting intentions report, where the USDA tells us how many acres we're going to plant. And then there's the stocks report, where we're going to get an idea of just how many bushels we have out in the countryside. If we're going to get really big surprises, I think it's going to come from the stock side, not from the acreage side, because we know we're going to plant the acres. The question is can we get them all planted? And remember, these are fluid. You've got lots of different crops competing for the same acre. So here in the next couple of weeks, we're going to have the major battle that starts to unfold. And here's what I think is relevant and important for us to look at is this yield number and the relationship with these numbers down here. If we plant 94 million acres of corn and yield 180, we have a 2.3 billion bushel carryout, and that would be bearish, right? That is not 450 corn. that also assumes that our demand numbers are what they are. But let's talk about 180 for a minute. Sitting on my desk, I have the average corn yield from 1940 to 1920 sitting here, and the highest on record is 176.6. We've broken 174 a few times, three times to be exact, but that's it. We have never grown anywhere. We have never grown 180, especially not in a year where we're going to try to expand acreage. And the other thing that I think is going to complicate this is this number, and I'm not going to dwell on this, but what I want to show you, here it is, fertilizer prices. Back in, all the way back in the prior life of like December, fertilizer was $70 an acre cheaper to apply than it is today. You're dealing with UAN at $400 a ton in places, and you're dealing with urea at $500 a ton. So I think that begs the question of how much nutrition can we really get on this corn crop with a huge cost increase, and has the market done enough work in order to put those acres into production? Because you have to have the yield in order to keep the carryout respectable. If we drop our yield down to 167.5, which is the yield 2 years ago. I mean, last year's was just 172. We're sitting at a 1.2. This is north of 450 corn. And God forbid we go lower or have more demand than what the USDA is telling us we have, because that number can come down radically, or South America could get into trouble. Remember, they just planted their largest crop late, right? It all came in the equivalent of being planted in late June and July. So there's questions about that crop. There's questions about what the final yield was on the crop that's coming out of the field now. And our weather is, at best at this moment, questionable. So just from corn alone, there's very little margin for error, right? You're talking anything below 10% on a stocks to use number, and that's very supportive for prices. But I think that's really emphasized and becomes under a microscope when you start to look at beans, because these numbers just blow my mind. Like, no matter what you do with beans, we're tight. So let's assume we plant 91.8 million acres and we yield 52. The largest yield on record is 51.9. The next highest is 50.6, and the one below that is 50.2. So we've never raised 52. We've never beat it, and we've definitely never done it on this many acres. Remember, this is a 8 million acre increase over a year ago, and by far the largest acreage number that we've ever planted. But look at the sensitivity to the yield. A drop of just a few bushel an acre puts our balance sheet negative, assuming that we don't sell any more. So beans have to have more acres than even 91.8, and they've got to get them from somewhere. You've got to get them from. I don't know if it's going to be cotton or if it's going to be wheat. I don't know where the acres come from, because all of those other classes have their own demand stories and will start to fight for them. So to think, well, bean oil topped and soy meal's coming down, and the world is going to come to an end because China doesn't need any food anymore. I'm not buying that at all, because there's been no data in the bean oil or in the meal market that suggests that usage is going down. If anything, it's the opposite. Those end products are in more demand now than they ever have been. So the argument that beans don't need the acres, I just don't get it, because we're too sensitive to yield, right? So I'm not going to hammer that point, but if if they print this number on corn, the market's probably going to have a knee-jerk reaction to the downside. But if they print a lower number on beans because corn had to take acres from beans, then this number becomes front and center, and beans go higher. So I guess the summary is this. I don't know how they have a bearish report across the board unless they come out and just say, hey, there's way more stocks on hand than we previously said. And if they do that, I think it's nonsense, because that's not what their weekly reporting data shows. It shows that these demand numbers are low and not too high. It shows that they've actually missed part of the equation. All right, so let's look at what trade action has done, and let's take a look at where we might go, and kind of some critical resistance points that are important for us to hold. All right, so here's the weekly chart of corn. This is the weekly continuation chart, all right? So if this whole move is completed, we would expect a pullback of roughly 38% of that move. That drops us all the way down to $4.72. Now, stop and think about that for a minute when we look at what the carries are, because we are inverted here. May corn is at 539. July corn is at 522. So we're got a 17-cent inverse there. And to December, July to December, we are 522 to 453. So we've got huge inverses in the market right now. So that's telling us that the market needs corn and wants it right now, out of the hands of out of the farmers' hands and into end users. So if we drop this price by 75 cents, what's going to happen at that point? At that point, we just sell more bushels, and we don't have the room or the space on the balance sheet to do it. What if we drop soybeans $2 a bushel? If you're just think for a moment like a Chinese buyer, right? You're in charge of supplying billions of people with their food. And you're looking at these potential numbers, because this isn't rocket science, and we drop $2 off of our price of soybeans. What are you going to do? Are you going to wait and see how this plays out, or are you going to jump all over it? I think at that point we become way too cheap, and so we have to just start jumping all over it if you start to think like they do. So I think a knee-jerk reaction to the downside, it could happen. The USDA can do whatever it wants, and it can print whatever number it wants. I think the market's telling you that that's going to be short-lived, because we're just too, we just have too many unresolved issues globally in order to make that work. Now, let's look at what beans have done so far on the weekly basis, right? It feels like they've just completely cratered, and they have, right? They've come down 75 cents or so from the peak. But look at what we've done on the weekly chart. We've done absolutely nothing to quell this uptrend. A pullback in an uptrend is uncomfortable, and they can go deeper than you like them to, but it doesn't mean it's not still in an uptrend. So 4 or 5 days of selling leading into a massive report with this kind of balance sheet, I feel bad for those guys that started selling it 4 or 5 days ago, because the risk is really to the upside, especially if we look at new crop corn or new crop beans. New crop beans have come off from 1264 to 1192. We're coming right into the top of our cloud. We're deeply oversold. This is a perfect spot for a bullish catalyst. If they break and come all the way back down into here, into this 1096 level, let's assume we drop it $1. At that point, I think everyone's got to load up and defend their insurance position, because our balance sheet is just too tight to withstand a move down there. And South America didn't yield enough to overcome it. That the South American fundamentals have been in the market long enough that they're not as dominant of an influence as they have been in the past several weeks. So another thing that's bullish. So here's corn. We've dropped straight down into the top of the cloud area here on corn as well, and extremely deeply oversold. So this is new crop. You know, all of your growers and all of you do spreadsheets on cost of production. Is this an attractive enough price at slightly below insurance levels to induce you to plant all of your acres and shift rotations away from soybeans or away from anything else? And I don't think it is. I'm not talking to anybody that's going to change the rotations to increase corn acres just because we love to plant corn. I just have not visited with that person, and maybe we will, but I think the surprise would be fewer corn acres and many more bean acres. But I think that ultimately that is just what needs to happen. Because watch this. If we shift bean acres from 91.8 to 96 million acres, and we still have a 47.4 yield, our carryout only goes to 85. That's not enough margin for error, right? We still have to have a record yield at 96 million acres in order to just be at par, or we've got to ration demand and kill it somehow. So I guess that can happen from an outside factor, but I don't think it's going to happen. I don't think that this is attractive enough to plant it. And I think beans are so bullish, they may go by the acres and we may shift them the other direction. I guess that's my point. And I think that ultimately is supportive for corn because it doesn't have the wiggle room either to play with. All right. So I'm belaboring that point, and I don't mean to ramble on and on. I can talk all day about the kind of all the different fundamentals and why the USDA's stocks numbers should come down, and we should get a bullish surprise out of that. But it's the USDA, and I don't think they're going to let a negative balance sheet get printed on any commodity. So I think that if they're gonna fluff it and find a place to make it look better, that's what they're going to do, is just find more stocks. But that would be counter what the spreads are telling us and what the cash market is telling us is really happening as well. Okay, that is 17 minutes. I think we've made our point. By about 11:45, we'll be right or wrong on this topic, and we'll adjust accordingly. I mean, if we're going to plant 200 million acres of everything and it's going to be a record yield because nothing else matters, and China doesn't want to buy food for its people anymore, then we'll adjust and we'll get short, and we'll be coming out of the bottom of these clouds, and we'll jump on that bandwagon and go with it. But for today, I think we're positioned right where we want to be, which is our upside open, and we're going to sit back and watch the acreage battle unfold because it could be really really dynamic. All right, there is significant risk in trading futures and options, and if you have any desire to do so, you've got to trade at the level at which you can afford and work with a professional before you do it. We thank you for calling in today, and we will talk to you next week.